Hello, hello,
Hello.
hello.
Hey, Karina.
Hi, Dez. How are you?
I'm doing great, trying to get used to this technology. But
Yep, we will
I'm
get it.
learning. I'm
We will
learning.
get it. That's right. So we are talking about Sensible Sundays. Um,
Yes.
Here on Sensible Sundays, we're talking about home buying, the home buying process, any questions, any concerns that folks have when they are stepping out into the water, the deep ends to go into home ownership. Des and I are extreme advocates for home buying. We have a true passion for home buying and the home buying experience. And we both believe that it does not have to be torturous nor scary to go through the home buying process. Oftentimes, I tell folks that fear is simply not knowing what's ahead. It's
Right.
it's just, I have an unknown factor. And so Des and I have decided we're going to conquer that fear with folks by providing that information. Okay. So welcome again to Sensible Sundays. My name is Karina Calhoun and Des Gerald is on the screen. We are partnering together to bring this information to you guys. And so I'm going to talk a little bit initially about where I'm from. I am from North Carolina. I was raised in Fayetteville, North Carolina, and I moved at a young age to Charlotte, North Carolina. And and I'll go into a little bit more after that, or what happened after that
That's
later.
my phone. I'm sorry. It's talking. My phone's talking
That's
here.
okay. That's okay. It's 20. We're just gonna say it's 2020. We have all kinds of technology out here, so
Oh,
we
gosh.
will just go ahead and
Bear
say
with me.
this: expect the unexpected, because we are learning, we are endeavoring. Okay, just as you guys who are watching this video are stepping out into the unknown, we are stepping out into the unknown. You've
But
got
it
your
makes it exciting, doesn't it?
yes. You guys have your piece, we have our piece. So we're doing
Right.
this thing together.
That's right.
So I am from North Carolina. I currently live in Richmond, Virginia with my husband and kids. And I just want to talk about why I'm passionate about home buying. Um, I currently we own several properties, and I'm just going to be very transparent. I owned a home back in North Carolina for years, lost my job and lost my home. And there was a ton of information I did not know then, even though I had been in the mortgage industry for years. But I have now, as a result of my experiences, I have become an advocate for home buying and home retention. Okay. And so that's why I love what I do, why my passion is so strong for it. And I think that distinguishes me from other home buying advocates, folks who work on credit, folks who are financial coaches, things of that nature. Des and I met prior to that time. We worked together at a mortgage company, actually the mortgage company that shut down, that caused me to lose my job. We worked there together and immediately formed an amazing bond and have kept in touch ever since then.
Yeah, and
So
that was what, 2006?
yeah,
Wow,
well,
it
yeah,
was around
2006.
2006. Yeah.
Yeah, I was gonna say maybe it was a little bit earlier, but I think it was about
Well, it
2006.
could have been 2005
Yeah,
because I got
it
my
was.
license in '03,
It
and
was
then
a
I
couple of
worked.
years. Yeah,
Yeah, I would say '05, '06.
yeah.
Yeah,
So we've been in this for a minute. I
yeah.
know for myself, my daughter just turned 22 last month. So I've been in the mortgage industry for 21 years now.
Hmm.
So I know I only look 19. And so, that's a little bit about me. So Des is going to talk a little bit about herself. So Des, tell us where you're from.
Yeah, so I'm from Boston, Massachusetts, in a town called Roxbury. We call it the Berry, in the hood. Born and raised. I moved from Boston in 2001 and moved to the North Carolina area. Now, my sister moved first. She was here for a few months, and then she kind of got me out here. I was gonna. It was supposed to be a pit stop because I was supposed to move to Miami, Florida.
Oh, wow.
And yeah, her husband had passed, and she was moving here with her two kids, and I felt bad. So I said, okay, yeah, I'll come and help you out for a little bit, and then I still want to go to Miami. I'll go, which I didn't go. I'm still here, and so I was living in Winston Salem. I would say from '01 to '08 when the market crashed.
Mm,
Market crashed in '08, and I actually was just going to go anywhere because I started to spin my wheels in real estate, and it was a real crazy time.
hmm
And that was like right after we had met, actually. Um, and to be honest with you, the reason why I actually, did loans or became a mortgage lender was to better suit my clients, better like know what the other side of a real estate transaction was. I really wanted to learn as much as I can so that when I'm servicing my buyers, I could say, okay, well, I did loans. I know what questions to ask
hmm
and how to point them in the right direction. Other than that, I wouldn't have been doing loans. I
Yeah.
was like,
Yeah.
God bless the people that do loans, but no, I'm not doing them. So 2008, like I said, I posted my resume everywhere. I posted it, and I was even gonna go back to Boston, to be honest with you. I
Mhm.
sent it out to Atlanta, Boston, Charlotte, and it just so happened that I found a job in Charlotte. And I had gotten certified as a property stager in 2007. And so not only did I get a job interview doing sales for a Yellow Page company, but I also got a job, a part-time job with a staging company. So that was really exciting. So that's what brought me to Charlotte.
Wow.
Yeah,
Wow,
yeah,
interesting. And I
yeah.
just want to add a little bit of just a tidbit of information. You and I actually met through your sister.
Yes, we did.
Yeah. And that,
Love
yeah,
Robinson at the time. Now love Ford.
yeah, yeah. And that was, I mean, you two really, really impacted me at that time and showed me strong, and I'm just kind of get off on a tangent a little bit, but strong Black women who collaborated, worked, I mean, really, really collaborated and wanted to push to make things better for folks.
Wow, thank you
That
so much.
that
Yeah.
was amazing for me. Yeah.
I appreciate it.
Yeah.
Yeah. Well, she actually has her real estate license now, and she hangs her license with me. She's more part-time though, but
Mhm.
she helps out in the Triad area, Greensboro, Winston-Salem, High Point,
Gotcha.
when I need her help. So she's
Gotcha.
still on the team. As a matter of
Awesome.
fact, she's gonna be. We'll be talking to her about business credit because she's really focusing on that, and I want to be able to bring her on and have conversations with us as well regarding building your business credit. So
Mhm. Awesome.
everyone will get a chance to meet love.
Awesome, awesome. So tell us why you are passionate about what you're passionate about, which is advocating home buying.
Well, I tell you what, I have to go back to you. I have to go back to my childhood really because I was just born into real estate. My dad was a landlord all the time, so we were always collecting rent from tenants. He purchased a couple of properties. My mom had OCD, and we joke around with her like with that, but she had OCD because we had to wake up at 6 o'clock every Saturday morning. We had to rearrange the furniture, wipe down the walls, the baseboards. I mean, dust, you name it, vacuum. And then after all of that, we had to go shopping. So we weren't buying furniture like every week or anything like that. But we would buy new comforters, new curtains, rugs, and she was insane. But that really prepared me for the staging industry.
Yeah.
It prepared me. It really did. Learning how to place furniture and all of that.
Mhm.
putting things together, shopping for things. It really prepared me for the staging industry. And just, my dad being into real estate, although he didn't have his real estate license,
Mhm.
prepared me for to be a real estate broker. I was
Yeah.
always in that world. My uncles had a they had a construction company. Like my uncles were into construction engineering and stuff like that. So I mean, with the houses that we had, I would have to sand floors sometimes, paint walls. So
Wow.
it's just in me. It's in my blood. And
Yeah.
I am a people's person. I'm passionate about building relationships.
Mhm.
That's like number one to me. Like I always tell people, it's not necessarily about the money. It's more about the relationships that I build, and the money will come.
So do you think that's what distinguishes you from other realtors, and not that we're downplaying anyone else? We're focusing on Des Gerald, the
Right.
real estate broker. So do you feel like that's what distinguishes you? And if that is the case, is there anything else that distinguishes you from other realtors?
Um, I would think that's one of them. I know there's other realtors that might have the same philosophy, but there are some realtors that, they don't even show property if they're not getting the full
Yeah.
commission.
Yeah.
They'll look at that stuff first. I don't look at that. I look at, is this going to be a great property for my client? Is this something that they want, that they've been asking me to find? And then we go from there. Another thing that may distinguish me from other realtors is that I'm big on setting the expectations for my clients, and I love educating them, and just having workshops and giving them as much information as I can on the home buyer process, because it's too much information to divulge. It just is. I mean, I could tell my clients maybe the same thing like 5, 10 times over and over again, but I'm okay with it because I know this is their first time experience. They're not going to remember. It's a lot to sink in. So I do try to educate them as much as I can up front during the process, and and that's just by having workshops, and before we even go out to look at property, I make sure they're pre-approved, and then I take them out for lunch or dinner of their choice. And then I do a buyer consultation. We go over the home buyer process flow chart that I put together, and I prepare them for, each phase of the process.
Gotcha.
Yeah.
Gotcha. And so just kind of backtracking a little bit, do you feel like, um, well, I'll just ask because I'm not going to assume, but what do you feel like is a personal accomplishment in your life that has helped ignite your passion?
Oh boy, a personal accomplishment in my life that helped me ignite my passion for the real estate industry,
Yes.
or just for relationship with people, which like
Real estate, in the real estate industry.
Uh, I would say just my first year in, not even my first year, my first 3 months in, I did exceptionally well for someone that just started. Um, I want to say I closed close to almost 1 million in sales in my
Wow.
first 3 months, which is not normal.
Hmm.
But that kind of ignited my passion for it, and just wanted to continue on. And I did hit some rough spots after that.
Hmm.
But and I mean, I don't know, maybe I looked up with the first couple of deals that I got, but I won't take it as luck. I'll take it as a blessing.
Yeah.
But that, in addition to, I've seen how other realtors, uh, I want to be careful of my wording here. I've
Yeah.
seen how other realtors work, and how they treated their clients based off of how much money they were going to
Mhm.
get from them. Um, and I wanted to be that light in darkness, I guess. I wanted to present another side to who a realtor is and a real estate broker, because we get a bad rep sometimes. We
Hmm.
do. But if I could be that light, that no, there's really good realtors out here that cares, and that, it's not all about the commission checks that we're going to get, but
Right.
it's actually looking out for you. I mean, that's what we're supposed to be,
Hmm.
advocates. We're supposed to be advocates for consumers that's
Exactly.
buying a home. And so
Yeah.
I take that seriously.
Yeah.
I take that seriously because I put myself in their shoes, and it's like, how would I want to be treated?
Yeah.
So,
Absolutely. And I'm going to ask you this question. I know it wasn't something that we talked about, but I think you kind of brought it up in some of the things that you were saying, which would then, because we are home buying advocates, we want to make sure people have a clear understanding. What is the difference between a realtor and a broker?
okay, so and be honest with you, well, yeah, you can be a broker. I was going to say, I don't know if you could be a broker without being a realtor, but you can. So a realtor, um, they go by a certain set of standards because they are a part of an association, whereas a broker is not.
Hmm.
And that's pretty much it.
Gotcha.
Yeah.
Because I want to make sure people have, there are a ton of questions that people have. And if we're able to answer these questions, which is going to lead me to the next piece,
Hmm.
if you have questions, guys, we want to answer those questions. So make sure you message us, Des Gerald, Karina Calhoun. We're in the home buying group. You have access to us. So make sure you ask those questions, and we will be diligent. We
Right. And
commit.
this is playing live, so
Right.
just put it right there in the comments. Like,
Yeah.
you have questions, put them in
Yeah.
the comments so that we can answer them.
So
And
we're
if
going
we
to be
don't get them to
diligent.
them today, we can
Right.
surely answer them on the next
Right.
go round. So,
Right. And we're going to be diligent, and answer any questions that you have. Certainly, if we can't answer it right then, I can tell you for myself, and I know for a fact that Des is the same way. If we don't have the answer, we'll go find the answer. And we're not
absolutely.
going to just give you anything. We're going to give you the right answer.
Absolutely.
Okay.
Yeah, I'm a
So,
researcher, so I love to learn. So I'm always researching something. So
yeah.
by all means, send me some questions that
Yes.
I don't know. Send them on.
Right. Because we want to make sure this is not something, that you're just doing willy-nilly haphazardly. We want to make sure this home buying experience is something that you're able to pass on to your kids. Your kids can pass it on, so that just we're breaking a lot of things up, buying homes, buying properties. So there's a ton of information that we're going to be covering in 2020, so that you are successful in your home buying process. So, with that being said, tonight we're going to be talking about buying versus renting. And so, Des is going to bring up a slideshow presentation, and we're going to be talking about that. So, Des, you want to bring that up?
Yeah, let me find that.
Okay.
Right. Okay. So let's start here.
Awesome.
Yeah, so of course this is Sensible Sundays, and we want to have these talks so that we can really, divulge some information and really see what makes sense. So, um, and tonight is about rent versus buy. And okay, I had to throw in this meme. I thought it was funny. Because you always hear about, you hear people say, "Oh my goodness, why are you not, owning your own home, and why are you just throwing money out the window and giving someone else money to pay down their mortgage?" But nobody really considers, okay, what really makes sense? Does it really make sense to rent, or does it really make sense to buy? So we're gonna tackle that tonight and just weigh out
Absolutely.
the pros and cons. Okay. All right. Okay, let me move this here. Let me move our video here so we could see. Okay, guys, give me 1 second. Okay, so if, oh my gosh, what is going on here? Oh my gosh. Bear with me because I'm trying to learn this. I'm surprised that I was even able to put this thing together.
You
Okay,
did a
so
great job.
so if you plan on staying at home forever, then it's typically true that buying will almost come out better than renting. But that's like over long periods of time. And um, nowadays, people don't stay in their houses more than what, 5 to 10 years, right?
Mhm. Yeah, I think I had read a while back that the average is about 7 years. So yeah, that 5 to 10 years is right on point.
Okay. So we got to take that into consideration as well. Let's just lay out like the pros and cons of everything, and see, well, at the end of this, we'll see what makes sense.
Hmm.
Depending on the upfront cost for buying a house, um, it could take several years before
Yeah.
you can break down comparing it to what your rent was for the year. Or um, actually, I didn't even think about this, but to rent a house, you have to have first and last month's rent,
Mhm.
right? And sometimes security.
Yep.
So that's kind of like a down payment as well. So that's another thing to consider. But so let's break down the numbers, or at least try to. So I went on MLS and I found a house here that this is a rental. It's 1,400 a month,
Hmm.
and this house was for 200,000. It's for sale. It's actually new construction.
Hmm.
And they're about the same square footage. The new construction is probably a couple hundred more square feet. But this 200,000 sales price kind of equates to the mortgage payment,
Hmm.
which would be around 1,400, principal, interest, taxes, and insurance.
Hmm. And what is the acronym that people use for what you just said? Principal, interest, taxes, and insurance.
EITI or
Yep.
pity,
Yeah.
yeah.
So we want
And
to make
sometimes,
sure as we're talking, guys, that you're beginning to understand a lot of different things talking about home buying, some of the jargon. I think because of the meltdown that Des was talking about, and the meltdown that during that time is when I lost my job and then lost my home. You know, there was not a lot of companies in the industry that were following regulations, and the regulations were not as strict. They are more strict now, and I think people are geared more towards consumer awareness and things of that nature, and the regulatories are geared towards consumer awareness. But we want to take that a step further and make sure you understand literally the ins and outs.
right.
Okay.
So when it comes to comparing rent versus buy, it's not as simple as saying, okay, if this house is 1,400 a month, I should be able to get this house, and the total PITI will be about 1,400 or less. So then I'm doing good. I'm making out. That's not really the case,
Right.
because there's some costs, unrecoverable costs, we call it, that are associated with having a mortgage. The principal and interest is not unrecoverable costs. And also the unrecoverable costs is, some people call it the 5% rule, but we'll go over that.
Mhm.
And I'm not going to go too much into detail because you
Right.
guys will definitely get lost.
Yeah.
If it's something that you want to learn or know, we could discuss it one-on-one, because
Right.
it's a lot of numbers and it's a lot of what ifs, and we just don't need to cover that tonight.
Right.
But unrecoverable cost is a cost that you pay with that has no associated residual value. meaning um, it's just being thrown out the window.
Yeah.
Your down payment to purchase a home is considered an opportunity cost only because if you were to take that down payment money and use it towards something else, like maybe purchasing stocks or purchasing something that will give you a high yield return,
Mhm.
it's opportunity money that you could use to
Right.
do that, as opposed to just not using it to purchase a home. Okay, so here I put that unrecoverable cost for cost of rent is 1,400. Ah, here we go. Stay right there, baby. Stay right there. Okay, unrecoverable. You did it again. All right. All right. Okay, thank you. Work with me. The unrecoverable cost for the mortgage payment is here. Your property tax, you have your maintenance costs. So, like, cost of repairs, like, if you need to do a roof, this
Right.
gets so sensitive. And then the capital cost the cost of capital, which is your cost of debt. So
Mhm.
you get a house that's 200K. If you put 10,000 down, then that 190 is going to cost you. What is it? You're paying interest. So that interest is a cost. And so on average, they say property taxes is about 1%
Mhm.
of the sales price of the house. The maintenance cost is about 1%. And then this cost of capital on average is about 3%. And that's what makes up the 5% rule.
Mhm.
So if you take the 5% rule, the way that you would calculate it is you would do 200,000 sales price times 5%. That would equal 10,000. Then you divide the 10,000 by 12 months. And so if you can find a rental for about $833 or less where you live, that might be the time when, hey,
Right.
it's okay to rent.
Yeah.
You know, if you're only going to be renting for like 1 to 3 years, then yeah, it might make sense to
Right.
rent. But over time, to me, uh, there's no way. But let's still weigh out the pros and cons here.
Mhm.
We're gonna weigh out the pros and cons, and then you guys could decide. Because to be
Yeah.
honest with you, it's really case by case, and everybody has their own personal things going on and situations going
Right.
on. But again, we gotta look at what makes sense.
Mhm.
So if you're paying rent and you're paying a $1,400 rental payment, look at this. 1 year, this is unrecoverable cost now. You've given up 16,000. In 5 years, you've given up 84,000. 10 years, 106. 15 years, 252. So that's something to consider
Mhm.
and really look at when you're trying to decide what's best for you. So that's money here that actually you could be paying it down on mortgage. And at the same time you're paying down a mortgage and you have equity or appreciation. Your house is appreciating at the same time.
Mhm.
Okay. So the next slide we have, um, oh, I included a loan amortization schedule so that you guys could see. Is that big enough?
Yes. Mhm.
Oh, let me grab my glasses because Lord knows I can't I can't see the little numbers. Let's see. So let's see, is it gonna let me expand? So if you look at these, the first payment, February 1st, blah blah blah, you begin with 200,000. Your payment is about 1,073. Look at this. Only $240 is going towards your principal.
Mhm.
All of this is going towards your interest.
Right.
$833. Look at how long it takes. Okay, so this is the 12th payment here, which means that would be a year, right? still, you only have 251
Mhm.
going towards your principal, and this 822 is going towards your interest payment. So the
Mhm.
bank is getting a lot of their money up front.
Mhm.
As you continue on, you know, then the numbers start to change, and then of course the interest goes down and your payments get higher. But let's see what year, I mean, what payment that would be.
And while Des is looking for that, I just want to interject because credit is my thing. Home buying is my thing, but also credit. This is why it is imperative. I think this one slide by itself speaks volumes of why credit is so imperative. Because in order for you to get a 5% or lower interest rate, you're going to have better credit.
Mhm.
We have tons of programs out here that can help with down payment assistance, that can help just all types of things, all types of situations. But the better your credit, the better you're going to have an opportunity to have as much money thrown at that principal balance as quickly as possible. Because if you have a higher interest rate, that 200 and some dollars that she showed in that first payment is going to be a lot less, because
Mhm.
you're going to have less money going towards your principal and more going towards your interest. So always keep that in mind. We want you absolutely positively to be a homeowner, but we want you to make this decision when it's better for you. Okay.
Right. Now, what credit score, and well, mid score, okay? That's another thing that we'll have to teach you guys about. You're not just the lenders aren't just looking at one credit score.
Exactly.
It's the three credit bureaus, and they choose the score that's in the middle.
Right.
So if you have a 500 score somewhere, and then you have a 600 score, and then you have a 620, then 600 is your middle score, and that's what the lenders are going to use to qualify you for a mortgage.
Right.
If I were anybody purchasing a home, I would definitely want to be at least around 640.
Yeah.
Can you
Definitely.
purchase a home at this credit score under that? Yeah, you can,
Yeah.
but there's more opportunity open to you at that score. I think now, though, they have some people that might want down payment assistance. They have House Charlotte, and House Charlotte will get you down payment assistance at a 620.
Hmm.
But again, I mean, the better your credit score, the lower the interest rate. The lower the interest rate, the lower your payment is going to be, and actually the bigger house you can afford. So,
Right.
that's definitely something to take into consideration. So
Absolutely.
now back to the schedule. I think we're breaking even here at around, um, let's see, payment 195.
Wow.
So it's your 195th payment, which is how many, let's
Let
see,
me see if I can do that
years is
calculation.
that? So we need to 195 divided by 12. Woo, that's 16 and a half, 16 and a quarter.
Wow.
So
Yeah.
16 years and 4 months is when you actually start to break even on paying half principal, half towards your interest.
Mhm.
And then the tables start to turn, um, where more is going towards the principal. But nobody stays in the house that long.
Yeah, see, that's what I was gonna
No,
say. They don't
nobody.
stay in that long. So, and this is gonna be something that Des and I are gonna talk about. See how this kind of can morph into so many different aspects of the home buying process. Des and I are gonna be talking at some point about how to look at your home as your right now home, but then turn it into an investment piece later on. So
Absolutely.
this is something that you're going to want to consider. If you're not going to be in your home no more than say 7 to 10 years, 5 to 10 years, then you want to look at how much money you're throwing at that principal. And then once you get ready to leave that home and hopefully turn it into an investment property, when do you start breaking even? So this is something that you can actually look at to make those determinations. So keep that in mind. We're going to be talking about that at some point in 2020 as well.
Mhm.
This is going to be an amazing webinar
Yeah.
series
Yeah.
production for you guys to really start to consider some things.
Yeah. Absolutely. Okay. So going back to um, my slides here. So this is just showing you, like, at the end of once you're all paying it off, the mortgage in 30 years, which doesn't happen these days,
Right.
you would have given the bank. So you start off with borrowing 200, but 469
Yeah.
is that's that's a lot.
And we're not trying to scare you guys. We just want you to be knowledgeable in what you are actually committing to,
Mhm.
and to know why, even at the end of the day, this is still good for you if
Mhm.
you're ready to purchase. Yeah.
Right. Right. These numbers look a little off though, because it's saying total interest paid was 164.
Hmm.
You borrowed 200, that would be 364. I'm not sure, but
Yeah.
anyway, it's not my numbers. I the numbers, I pulled it from offline. Um, okay, so the next slide. Okay, I have the pros and the cons for the next slide after that. Um, so with rent, you can pay less upfront typically. And I say typically because you can buy a house with no money down. I've
Yeah.
actually had clients do 100% financing and they got money back at closing.
Hmm.
So that's not necessarily true. It just really depends on your situation, whether you have to put money down or not. But down payments are anywhere from 3.5% if you're doing FHA,
Hmm.
5% I think minimum if you're doing conventional, and you could put up to 20% down or more down, whatever your situation is.
And I actually, in the first house that I purchased, we actually put down, I think the regulatory 3%,
Hmm.
and because of the seller concessions and different things that transpired when we went to closing, we actually got a check back.
Okay. Yep.
Yeah.
Yep, that happens. So with renting, you do not have to make repairs.
Hmm.
So if you're someone that's like, you don't want to have to deal with that, then renting might be for you. Relocating is easier and more flexible to pick up and move to like a different area if you needed to. Um, you could potentially save some money on utility bills because a lot of rentals, they'll either pay water, the water, and then you're just paying electric and gas or whatever, or your utilities might be included. But again, we already had that discussion with the 5% rule. So if you do that 5% rule and you end up getting a rental, you got to keep that in mind too. How much is this rental, and are the utilities included, and are they not included? Type of scenario to make
Right.
to make the sensible decision. And then for the pros for buying is, I put here 100% financing. You can get into that. You could get into a house with no money down. That's very realistic. Um, Down payment assistance also helps with um, not having to come out of pocket with your own funds to
Hmm.
put money in down. So there again, that's moving in with having to pay that down payment. You have a fixed rate payment for the life of the loan. Um, with renting, the rent usually goes up
Right.
like every year.
Hmm.
Um, if not by the third year that you're renting from someone, they're gonna slowly, gradually increase
Right.
the rent. So you don't have that stability there. Um, And then you have tax payment deductions with
Mhm.
purchasing a home. So if you make 50K a year, and going back to the amortization schedule that I showed you guys with all the interest payments, and that's another reason why I wanted to show you guys, because yes, a lot of the interest is going towards paying off that mortgage, the majority of, the beginning years. But you do get to
That's right.
write all of those payments off. So if your payments add up to like 15,000 that you paid for the year, and you make 50K, then you're going to be taxed on the 35K income,
Mhm.
which that's a great benefit there. And I think it's for houses that are 750K and under. But
Mhm.
and the cons for rent is the landlord can increase the rent at any time, which we just said. You cannot build equity if you're renting a property. There's no tax benefits to renting, and you cannot make any changes to your house or your
Right.
apartment without your landlord's approval. Me, I'm very creative. I have to be able to paint a window here, do this there, and I would have to do that. Um, Many houses available for rent have a no pets policy. So
Mhm.
for all you pet lovers out there, that's another downfall for renting. Or they'll charge you a lot
Right.
for a pet deposit and all this
Mhm.
nonsense. But
Yep.
I mean, I get it. Sometimes pets can tear up your household, and you need that deposit to recoup. So, and then the cons for buying, let's see, more difficult to move to a new location,
Mhm.
which if you have a good realtor, they can make your life easy. Because I'm like, girl, don't worry about it. I got you. I'm gonna find somebody to rent that house out. If you want me
Right.
to rent it, I'm gonna, so that's what realtors are great for, because we have we have the inside, we have the connections, we have the constant buyer pipelines. We could throw at our buyers. We have other realtor friends and peers. Hey, I got this property. You got any
Right.
buyers? So, that's something that's I wouldn't worry about too much. Extra costs such as repairs, taxes, insurance. Yeah, that's true. That's true. That's part of your unrecoverable costs, which we went over earlier. Upfront costs, down payment, home appraisal. Okay, that's if you have to put a down payment.
Mhm.
Majority of mortgage payment goes towards interest in the first 10 years. That's another con. But then again, since you could write it off, is it really a con? I don't know.
Right.
That's
Right.
for you to decide.
Right.
And then of course the landscape maintenance. I
Mhm.
have so many people that clients that want to buy a townhouse, because with townhouses you have HOAs, they take care of all of that stuff. They prefer to buy a townhouse
Yeah.
and spend anywhere from 150 to 250 a month
Mhm.
extra, so they don't have to worry about maintenance. And I'm like,
Yeah.
huh? Are
Well,
you crazy?
it works. It works. Let me tell you, because we actually did that in our first house here in Richmond. It was it's a condo. We bought that, and it has the HOA dues are like $200 a month, but
Mm-hmm.
we don't have to pay for anything. That includes the trash removal, the sanitation folks coming to pick up the trash. They paint because we have steps,
Mm-hmm.
steps and then the rails and everything. They paint that. They paint the front door. They wash the house down.
Mm-hmm.
They do the grass. They do the roof. They do a ton of stuff that, this was, how many years ago did we buy this house? I don't know, 6, 7 years ago. And so we didn't have to, we were too busy. I mean, we had, younger kids. two are now out of high school. So at that time, we just had like a ton of stuff that we were doing, and it made sense for us
Yeah.
to
Well,
buy that.
hey,
But
it is Sensible Sunday, so as
right.
long as it makes sense.
But the thing about it is, and I'm going to always push this, our credit was good enough for us to
Hmm.
get our mortgage payment down. So it was actually, it came out the same as if
Hmm.
we were buying a single family home and just had a um, groundskeeper keeping up the house for us.
Yeah.
So
Well,
it,
see, with my clients, what I try to get them to think is that, okay, 100 to 250 a month extra, or maybe $50 a month
yeah,
during like half of the year. Because the other rest of the grass is not going to be growing fast in the colder seasons.
right.
So I try to get them to think along those lines, because then that's extra savings to you.
Mhm. So it's all what makes sense to you.
That's
The,
right.
the second house that we bought, there's no HOA and there's nobody who's going to be doing the lawn or anything like that. So, these are things that talking with your realtor, or if you have a home buying advocate of some type that you can work with, these are the types of things that you can sit down and discuss and really pinpoint what's important to you, what makes sense to you,
Right.
what's sensible to you. And so this is why we are really truly advocating, don't just run out and do it on your own. Have somebody that can help you with this.
Yep, absolutely. And so here you see where I have checked off buy for myself. What box are you guys gonna check?
Right.
That's what I want to know.
Absolutely.
What box are you gonna check? So if you check buy, you definitely need to reach out to us so
Yes.
that we could point you in the right direction and put together a home buy game plan
Yep.
and get started.
Let's
Get
do it.
started, yes, get started building some wealth, because I'm all about building wealth.
Exactly.
That first house, I always tell my clients, look at it as an investment property.
Exactly.
I always say, is it going to have great appreciation value? That's one thing we have to look at.
Mhm.
Is it going to have does it have nice features?
Right.
Just in case you have to sell it, you
Right.
still want to make sure it's going to have some good resale value there as well. So, just a lot of things to consider and think about. But I look forward to helping some of you guys out there on your journey to home ownership and doing more of these Sensible
Absolutely.
Sundays. You guys definitely drop any comments that you have about our segment, and any questions that you want answered, anything that you want to know. We're here to help. All right.
Absolutely. Absolutely.
Okay. It's about to be 2020.
Yes. And we
What
have
is
to
your
go
vision?
in
Yeah.
with
What's
that
your vision for 2020?
vision.
That's
Yes.
right. What
We
what
have,
is your vision for your life? It has to be building wealth. It has to be. You want to leave a legacy for your family, your children, and your generations to come. And we want to be there to help you build that. All right. Well, we'll see you next Sunday at 9:30.
thank you guys.
Thank you.
Bye.
Bye.